morning, everyone. Good morning, AIBC Summit. So before we start, I would like to thank the entire AIBC team for making this happen. I know they work really hard, so thank you for the organizers. And I think that's a really, really beautiful time to have the discussion of this sort today when we witness the market instability, right? And with all the recent events which we've all been facing lately, I would even say in the past few months, not just the past weeks, and as a result of it, we are in the middle of the bear market. So I think this time is the best one to really address the very important issue. And today I have beautiful speakers on this panel with me, representative of the centralized market and the centralized exchanges. So I am looking forward to a very insightful conversation here today. So before we start, let me introduce myself. My name is Sophia, and I'm Operations Director for My Liquidity Partner. My Liquidity Partner is the project that provides liquidity to the decentralized exchanges. So those users who choose to stake their currency with us, we offer them 1.75% yield per week. So yearly, it's a bit over 100%. So with these terms which we offer, we've been monitored really, really closely, and we should be really careful which platforms we choose to work with, since substantial part of our operations still running on centralized markets. So now let me, guys, please introduce yourself. Let's start with you, Michaela. Please give a quick intro.
Hello, good morning, first of all. My name is Michaela, I'm business development for Huobi Global, specifically for the institutional team. I lead institutional relations for the exchange, specifically in EU, US, and LATAM. For the ones here, probably you have seen me around if you're based in London, or if you're part of the London ecosystem. Really, really excited for this panel. I think it's going to be a good one. I know there are many questions from the public, but let's see what we can do to answer them in the best of ways.
Thank you, Michaela. Greg, please.
Hi, everyone. I run the biggest non-dollar stablecoin in the market since 2018. I'm committed to transparency and values that are finally coming to the light of the day. We are the only one audited by Big Four name. We have no conflict of interest. We keep one-to-one cash, and it's the biggest and one of the oldest stablecoins backed by euro on the market.
Hi, everyone. Hi, AIBC. I'm the representative in the EU for KuCoin Exchange, Dorian here. And well, as my colleagues have just mentioned, we have a lot of work these days with the market instability to answer to, and we will be trying to tackle this task with you this morning.
Thank you. Thank you guys very much for the introduction. Not like your project would really need one, but still, maybe we can digress now a little bit in the current situation, right? So how you guys were affected, how the market of centralized exchanges was affected in the past few months and in this bear market run, right? And maybe your thoughts about what would be the regulators' response to what is happening at the moment. So, yeah, maybe let's start with you, Daryl. Yeah?
Yeah?
You want to?
Okay, so one thing that we need to remind ourselves about is that our industry is pretty young, and being regulated doesn't mean there are no crises going to happen. I mean, we've seen regulated industries suffering from bad apples before, and the whole goal in this turmoil right now is not to be associated with the bad apples of the market. And that's actually a challenge that we are ready to tackle for, because we have to fight for transparency, we have to fight for regulation, but should it be regulation only from the outside, or should it also be regulation from the inside, like inside practices of exchanges that we can show for and build more transparency coming from the inside of the practices of our own industry? Those are questions that are being addressed right now and that are being addressed by every leader of the sector of the industry. We really hope this is going to go for the best. And we are working together, which is already a good thing. Now we are speaking with each other, and we are trying to create standards for our industry, for institutions to have somebody reliable, somebody knowledgeable to talk to on the long run and to build relationships with as this industry develops.
Thank you. Thank you very much. So, Michaela, you want to?
Sure. I think that how this affects us the most is on trust. As easy as that. I think centralized exchanges have been doing a good job in the last 2-3 years, and in a matter of 5 days, all that trust is gone. And that's the most impactful, more than just the amount of capital outflow from exchanges in general, is trust. And again, it will take time to rebuild that trust. What I'm doing at the moment in my daily job is just take care of one institutional client at a time, because all institutional clients has been hit by this recent crisis. So it's just a matter of showing more transparency to them, to make sure that they feel that their exchange is taking care of the client, that is being transparent with them. And that's going to be key in the months ahead. All exchanges, or at least top 10, like Huobi and KuCoin, they are undergoing already several layers of audits. Huobi specifically already completed Miracle Tree Proof of Reserves, and it's going to do a second one next week. But again, it's not only about saying, yes, we have the proof of reserve. It's more than that. Again, it's rebuilding that trust with every institutional client. It's not just a simple announcement of, okay, we have really good auditors, because we saw how that went, right? FTX US, as you said.
Exactly.
It was regulated, right? So it's also about, I think it's going to be transparency, but also from the regulator side, they do have a responsibility to go deeper on insolvency in the crypto market. They were not capacitated enough to deal with what we saw in the last few days. That's my comment on the matter, and I think, again, if I need to reinstate something, it will be we will need to work twice as hard to rebuild that trust.
Amazing. Thank you so much. So, Gregory, your comment on this one?
Well, all the centralized exchanges are now rushing to publish their asset side of the balance sheet, but nobody is talking about liabilities. So if you have, say, whatever, X amount of assets, what are your liabilities? Okay, you publish the asset side, but maybe you owe more than you have. Stasis has been committed to transparency from day one. We started publishing all our assets since 2018 daily. We published the Chainlink Proof of Reserves feed since 2 years ago. So we've been used as an institutional grade quality on and off ramp for the last couple of years, and we processed more than €500 million in euro transactions, and no bank refused to send money to us or from us. But I think going forward, it's a big question whether crypto should be regulated as security space, because in securities, clearing, custody, and settlement services are separated and licensed separately. In that regard, stablecoin should be a separate thing to audit and to regulate, and then exchanges will not touch clients' funds at all. They'll just match the order book like NYSE or other exchanges doing that through a centralized clearing house. So, of course, DeFi has a specific spot here, especially if transactions fees will continue to decrease in costs. But meanwhile, again, history does not repeat, but it rhymes. The capital markets saw Enron, WorldCom, MF Global, Lehman Brothers, all the same events happen in capital markets. For some reason, crypto industry has been asleep at the wheel and hasn't learned the traditional markets history lesson.
If I might jump in for 10
go
seconds. Actually, that's exactly the case. Like, we have a need for regulation, but it's not a one-way relationship. It's a two-way relationships, meaning that regulators right now also need to understand what types of assets they are regulating. Like, you have been talking about securities. The framework for securities comes from paper securities back in the TradFi days, and this might not be the most adapted case for crypto. There are institutions who have a real need for utility with centralized exchanges, and how we are going to work together to build this framework and move forward together, this is going to be the massive issue in the coming month.
Thank you very much. So guys, I'm really happy to hear which approach all of you taking to deal with the situation which we're all facing. I think it's extremely important to understand that regulations and audit is just one part of the journey, but there is so much beyond that when we need to build a strong relationship with institutionals and institutional clients and to move towards the adoption of this side of the industry, right? So with this in mind, what do you think, what is happening right now in the market? Did it push us away from adoption of the institutional investors and institutional traders in the centralized exchange market? And which role do you play and how you can really help the process and how you can boost the process?
Sure. Again, from Huobi's side, we have tried to put the best on institutional adoption and to help as much as we can with institutional adoption. If I have to give one example specifically, and probably one of the best catalyzers of this will be the onboarding. The onboarding for institutional clients needs to be as smooth as possible, and that's something that we're taking care of at the moment. How do we onboard an institutional client in the fastest way and in the best way? And again, we're now, after what happened a few days ago, I think we need to present better frameworks to onboard institutional clients from TradFi. It needs to be a more smooth framework, but again, they need to feel comfortable trading with us. And that's what we're focusing at the moment. What's the best way to deal with an institutional client at the moment? Again, giving them as many features as possible for them to trade the markets. How many structured or derivative products are we offering to them? How many DeFi type of products are we giving to them? Because they're also looking to trade DeFi type of products, such as herein, for example, which is a passive income type of product. Now, with this in mind, again, just to have two things clear will be a perfect onboarding for institutional clients and the best type of products for them to help or alleviate that transition is what exchanges, or at least Huobi, is focused at. I will let my colleague explain further on their approach. And yes, it's key to have the platforms in place for this onboarding. One of the services that institutional clients ask the most is on-ramp, off-ramp of fiat. And an exchange needs to provide that. So those are the tiny things that we're watching, what an institutional client needs at the moment. And the faster we provide that, the faster the onboarding and the faster the adoption will be.
Super, yeah.
Well,
Greg,
talk to us. We can facilitate that as a service for you guys because we work with institutions and the demand for the digital assets is growing. I had some slides if you can demonstrate maybe, but over the years, according to Fidelity Digital Assets, Digital Survey, next couple slides, the demand has been growing over the course of last 3 years. So more and more institutional clients want to adopt crypto as a part of their investment portfolio. They want to trade it. And a couple more slides, please. And then all of them can start with something simple, like a stable coin. If they can legitimately acquire a stable coin, it becomes very easy for them to go into any other digital asset trading or staking or allocating capital. Can we click a couple more slides? There's just, this one. So this is the demand according to Fidelity survey that although this year market has corrected, the demand has grown. More and more people want to allocate, want to try this asset class, and the proportion of stable coins as a market cap among all digital assets is also growing. So that tells you that maybe all these thousands of coins are short-term experiments, but the DLT technology is here to stay to service clearing settlement of currencies as we used to use in our transactions in real world, right? But just on a different layer. It's just more convenient, 24/7, self-custodial, etc.
Good.
So this is like stable coins as a percentage of market cap. Just look how over 3 years it went up 5 times. This is the daily trading distribution by the different types of coins. So the point is, some jurisdictions will start regulating stablecoins in a institutional grade quality way, and as previous panel said, that will kick the flood of capital in and open up this market.
And overall, regarding traditional finance adoption and their coming to crypto in many ways, why SEXs are a way for them, a privileged way to enter this market, is because we have services that have a real utility for them. Should it be lending, exchange, providing derivatives, all these types of products that they will find from us. And now, right now, we can even build new solutions, more decentralized one, thanks to the fact that we are going through these processes towards more transparency and trust. For example, you can use, you're an institutional, you want to keep custody of your assets, you want still to trade them on KuCoin or enjoy some types of products that are there. You can use our KuCoin wallet, totally decentralized, steal your keys, so your crypto, your keys. We have no custody over that. We can work with your custodians, we can work with other institution counterparts that you're working with. Like, we are actually creating a framework that will be decisive for the adoption of crypto by traditional finance in the coming years. This is being decided right now. Solutions are not definitive as we speak. The real positive point of SEXs is the utility that institutions can derive from it.
Thank you, Daryl. Greg, it's really a good point that you mentioned that even though we witness a lot of ups and downs in the industry, even though we witness a lot of projects that letting us down a little bit, as the entire crypto market, right? We still have the growing interest towards the crypto assets, and we still have the growing interest from the institutional side. So now I just wanted to quickly tackle that, even though the centralized exchanges are going through certain challenges at the moment, we cannot even consider moving towards the fully decentralized market approach, right? I'm talking on behalf of my company, and we're utilizing decentralized exchanges for performing our operations, right? However, the internal operations still running off the centralized exchange, right? That's just another proof that even though we're moving towards the DeFi products and we're going with the decentralized wallets more and more, especially this week, I think, we still cannot say that the world will be entirely decentralized. It's still a really long way towards this road, right? So now, maybe we just have a couple of minutes left. So guys, maybe your final notes on where the industry should be moving now in order to gain the trust back and in order to bring back the individual users back from their cold wallets, right? And to gain more trust from institutionals. Just the final remarks from you guys. Michaela, if you want to start.
I think that the two major trends I look forward is, first, we're going to see a massive shift towards operations and treasuries, or more focus on operations and treasuries from now on with exchanges. And we're going to see exchanges bringing audits to the next level. And I'm not talking only about Merkle Tree, because that's only one type of proof of reserve. Transparency for us is going to go to the next level in all means. And I think that the second one will be, we're going to bring more products to the market that will make this transition between TradFi and crypto in the best possible way. Again, we have been focusing on derivatives product lately and spot trading products lately, but we're going to see more of them. And product-based and institutional-grade product-based is probably going to be the key factor to alleviate all this turmoil, I would say.
Thank you. Thank you. Greg, you want to give your final notes?
Well, again, the decrease of the counterparty risk should be on everyone's agenda, and the ways to address it can be various, right? But basically, the transparency of the balance sheet of the counterparty, transparency into the operations, and the strength of the company, the amount of liabilities, the duration of these liabilities, and institutional grade quality counterparties. So bigger banks, maybe EMIs that have accounts in central banks in Europe, which is basically a risk-free counterparty to hold and move euros around, would be a crucial component of the next chapter.
Thank you. Darryl,
yes,
please.
absolutely. More mobility. And coming back to your question, I'm not entirely sure that retail that learned how to use cold wallets should come back to hot wallets. I mean, the more people get educated about this, the better. The only thing is different types of products for different types of people, different types of demand, right? Like cold wallet may not be the entry point, the starting point for many if we want to drive adoption, and that's where sexes come and still have a function in the coming years. But as far as I'm concerned, like the more decentralization, the better.
Thank you. Thank you very much. Thank you to the panelists today. Thank you, guys, and thank you for listening.
Thanks, AIBC.